I guess it depends on whether you paid attention to the Fed's measure or you paid attention to the Fed's message. If you paid attention to the Fed's measure, which was to keep rates on hold, yes, I think that's good for emerging market currencies. Clearly, a lot of investors were concerned about the Fed hiking, and as a result, they were bidding up the dollar to the detriment of emerging market currencies over the last few months. So any delay presumably would take pressure off of the dollar from going higher. If you pay attention to the Fed's message, it was not a very optimistic message. It was a message that highlighted external and global risks to growth. And of course, emerging markets are highly dependent on global growth, given that a lot of them produce commodities and sell commodities. And therefore, the Fed's message was not really an enthusiastic one for the emerging markets.
More downside ahead. I mean, I hate to rain on everybody's parade, but bottoms don't start at the top. We had a multi-year uptrend. It's been consolidating for most of the year. That's broken if you just look at the S&P. I was actually on Power Lunch on the 21st of last month, and I had a downside price target of 1910. We've consolidated since then, and the way the market's trading today, I'm kind of looking at the next leg down as being 1800. I hate to be 1800 on the S&P.
To me, it was a dovish hold. The Fed lowered its inflation forecast, lowered its growth forecast. The tone was pretty tame. To me, the market got nervous when it heard Yellen harp on the fact the global economy is weak. They're watching global developments. They're in particular watching China. People got nervous, and we're seeing the fallout from that today. The U.S. consumer is in reasonably good shape. Nearly 70% of spending is services, so the retail sector is very small. What I can tell you is the U.S. economy is reasonably healthy. The job market is good. Tax receipt collections suggest actually aggregate income creation is good. We're getting lower gas prices. The holiday shopping season should be good. It should be excellent for retailers. Overall consumption should be good. The problem is the remaining part of the economy, capital spending and net exports, that remaining 25% rather, is going to look horrible. Retail I like, the other stuff I don't. In terms of what Bill was saying, I just want to add, he's exactly right. We have another layer, another part of the Fed reaction function. So now we're going to trade not just off of U.S. data, but Asian data. I think it's crazy.